What's the typical ROI after factoring in all costs? In Dubai, the typical net rental yield, client annual rental profit minus all operating costs, generally falls within the range of 5.5% to 8%. This strong performance is due to two primary factors: high rental demand from the growing population and the absence of annual property taxes or income taxes on rent, which keeps expenses much lower than in most global cities. To show you how we arrive at that net figure, let's break down the essential costs you must factor in. The largest deduction is service charges. This is the most significant annual expense you pay as an owner. It covers the maintenance and upkeep of all common areas: pools, gyms, security, AC maintenance for shared areas, etc. How it's calculated? Based on the size of client property, typically in AED per square foot per year. Typical range for apartments in mid-market, high-yield areas, JVC, JLT, Arjan, usually AED 12 to AED 18 per square foot. Prime luxury areas, downtown Dubai Marina, often AED 20 to AED 30 plus per square foot. The highest end towers can be AED 50 plus. Villas, generally much lower, typically AED 3 to AED 8 per square foot of the plot size, as owners manage their own internal maintenance. Property management fees if outsourced. Most investors, especially those living abroad, hire a RERA licensed property management firm to handle tenants, rent collection, and maintenance. Long-term leases, 1 year, typically 5% to 8% of the annual rental income. Short-term holiday homes, fees are significantly higher, often 15% to 25% of the gross revenue, because the management company handles everything from cleaning to guest check-ins. Maintenance and contingency. Client should always budget a buffer for minor repairs and potential vacancy. Maintenance buffer, set aside roughly 1% of the property value or 5% of the annual rent for unforeseen minor repairs, like fixing an AC unit or a plumbing issue. Vacancy factor, budget for 1 month of potential vacancy. Even though the market is strong, a gap between tenants is possible. Simplified net yield calculation. Here is a simplified example showing how the net yield is calculated for a typical 1,000 square feet apartment purchased for 1,200,000 dirhams. Keep in mind that the total ROI combines the net rental yield with capital appreciation, the increase in client property's value. Since Dubai has been seeing strong capital appreciation, especially in prime areas, client actual annual return on investment could be significantly higher, often 8% to 15% when combining both rent and value growth. To give you the most accurate projection, we need to choose a specific area and property type to calculate the exact service charges.